On 1 January 2019, ExpressFit purchased unlisted bonds at its face value, also the fair value of 4 million rand. The bonds pay interest every 4 months at a nominal market-related coupon rate of 8% per annum. The bonds will mature on 31 December 2023 at a premium of 10% of its face value. Now let's just stop there, guys. Now the way that I remember premiums is that if I include this bigger as, therefore this will be the 4 million times 1.1, and this will be the 4.4 million, and this will be the future value. The bonds are correctly held within a business model where the objective is achieved both by holding financial assets in order to collect contractual cash flows of principal and interest, as well as to sell the bonds. Okay, now let's have a look at our financial instruments revision page. We need to identify the classification. Now they indicate to us to earn interest and sell. Therefore, collecting contractual cash flows, solely payments of interest, of principal and interest, and selling of the bonds. This will be financial asset at fair value through OCI, and the fair value gain or loss will be through OCI. Okay guys, because this is through OCI, what do we identify? That this will be included in our equity, and we need to include a line item in our template, which will be the fair value adjustment on debt instruments. Fair value adjustment on debt instruments. Right. Okay guys, then they indicate to us the financial director also made the following schedule regarding the credit losses, balances and fair values relating to these bonds available to you. Okay, so let's just quickly stop right there. First, we now know that this is a financial asset at fair value through OCI, and the movement should be included in our OCI, our equity. Okay, therefore at the end of each period we will have to remeasure the bonds at fair value. Right, I just want to indicate here guys, this is a financial asset at fair value through OCI, but the fair value will be in our OCI. Right, okay, now first step, I'm going to include my timeline. Therefore, when I look at this, I need to identify that on 1 January 2019, they've purchased the bonds. Our first year end is 31 December 2019 and then 31 December 2020. Okay, so when we look at the scenario, they indicate to us that the bonds pay interest every 4 months at a nominal market related coupon rate of 8% per annum. Therefore, when you look at my timeline, I've included first payment, second payment, third payment, fourth payment, fifth payment, and sixth payment. Now, we know that our future value will be the 4 million times 1.1, and this will be 4,4 million. We are able to identify our present value. They've indicated to us that this is the 4 million. We can calculate our payment, the actual cash, which will be the 4 million times 8% times 4 over 12, and this is an amount of 106,667. If we look at our period, remember guys, they will be paying this 3 times a year for a period of, we look at the scenario, they indicate to us the bonds will mature on 31 December 2023. Therefore, we have 2019, 2020, 21, 22, 23, 1, 2, 3, 4, 5 times 3. And this will be 5 times 3, and this will be 15. Right, now we need to determine our effective interest rate. Okay guys, I have a shop, therefore you can email me with a shop. I don't know how to use an HB, but please guys, if you are on our Facebook group, ask your friends. Okay, with my shop, I need to include my future value, 4.4 million. My present value, I need to include as a negative. My payment, and this is important, is, guys, per payment. Therefore, for a 3-month period. Therefore, my period should also be for 3 months. And this will be 3.20 times 3. Why? Because when you look at this, guys, let me just quickly show this to you. 4 out of 12. 3. And now times 3. We need to compare apples with apples, and this will be 9.59%. Okay. Then they indicate to us in the table, the schedule, that we have a fair value at the end of 2019 of 4.2 million and at the end of 2020 of 4.4 million. I'm going to include this on my timeline as well because I tend to forget this, guys. 4240000, and then my fair value at year end will be 4440000. Now remember, we need to include our 2019 balance and 2020 balance. Therefore, we need to determine what is the fair value at the end of 2019 and then what is the fair value adjustment at the end of 2020, because we need to include this in our equity section, 2020's fair value and 2019's fair value. But how do we do this? Now, I'm going to explain this to you by means of journals again. Remember, you do not have to include your journals. Right, now you need to make use of your financial calculator. Remember, first you had to determine the effective interest rate, 9.59%. And on my calculator, guys, my shop, I need to press 1, and I'm going to write this down, 1 amount. Then the first amount is my capital amount. The second amount that the calculator indicates to me is my interest. Therefore, guys, if I include 1 amount for the first payment, my calculator will indicate to me that the interest will be 127865. For my second payment, my interest will be 128543. And for my third payment, the interest will be 129242. Therefore, the total of the interest for payment 1, 2, and 3 will be the amount included in our profit and loss. Okay. The actual amount received in our bank account, guys, will be the 106. This 106667. Look at this. 106667, 106667, 106667. And then the balancing amount will be recognized to my financial asset, which will be 21.1 million, 21.8, and 22.5 million. But guys, you could have used your financial calculator and include 3 or more. The first one will be your capital payment, the second amount indicated to your interest, and the third one will be your balance. And your balance will be a carrying amount to the value of 406550. Remember, you do not include journals. I do this to explain to you. Right, therefore, we are now able to identify that our financial asset will increase with an amount of 174350. Okay, guys, and this will be included in our fair value through our OCI. Now let's immediately transfer this to our template. I'm going to call this my, let's say, calculation 3.1. This is my 2019 balance. 174350. Okay, now let's just quickly have a look at our journal, guys. We will have to debit the financial asset and credit the fair value adjustment in our OCR, which will be included in our equity at the end of the year. Right, now, when we look at 2019, what do we need to calculate? What do we need? We need to identify, 1, what is the interest for this period, guys? because this should be included in my profit and loss, which should be included in my retained earnings. Therefore, number 1. And then number 2, we need to determine what is the carrying amount. Okay, now how do we do this? Where do we start? Do you agree with me? If we look at all of our journal entries, let me just complete this one. 174350, 174350, and we add all of the line items relating to our financial asset. Our financial asset will now have a carrying amount of 4240,000. Therefore, when you look at the bottom of your screen for me, please, in terms of our 4th period, if we need to calculate our interest, this will be 4240,000 times the 9.59% for a period of 4/12 months. When you look at my timeline, remember, payments will be made on number 4, number 5, and number 6, right? Therefore, my effective interest for the 4th period will be 135,539. This will be included in my profit and loss. Now, for the 5th period, guys, we now need to determine what is the value of our financial asset. Therefore, if I include my journal number 4, my bank will be 106,667, and the effective interest will now be 135,539, and I will have a balancing figure included in terms of my asset, 28,872. Therefore, if I now need to calculate my interest for the 5th period, this will be 4240,000 plus the 28,872 times 9.59% times 4/12, and this will be an amount of 136,462. Again, include your journal 106,667. Remember, you don't have to do the journal. I do this to explain to you guys. 46. Okay, why do I repeat this so much? Because I actually do get students that ask me, do I need to include the journals? No, you don't. I do this to explain to you. Okay, balancing figure will be 29795. Now let's do this for period number 6. I've included our payment number 6, guys. The bank 106,667, the interest 138,366, and our balancing figure. Okay, so we now need to determine what is the total in terms of our interest, guys. We can add all of the purple together, and this will be the total of the interest that should be included in our profit and loss, and this is an amount of 410,367, and this is going to be my calculation 3.2, and let's transfer this because this will be my interest, and this will be 410,367. Did I indicate 2? Let me just check. Yeah, calculation 3.2, calculation 3.2. Right, next. Okay, when we look at our year end, 31 December 2020, we now need to determine what is the carrying amount of our bonds. Okay, how do we do this? We know that our bonds, when you look at, sorry guys, I just want to move my screen a little bit here. Let's include this here at the bottom. I'm going to call this calculation 3.3. We have the 4240, right, plus the journal number 4, plus journal number 5, plus journal number 6. Journal number 4, we have an amount of 28872, 29795, and 31699. Calculation 3.3, and this is for 330366. I've included this here, guys, at the top, 31 December 2020, and we are able to identify when we look at this, guys, our fair value is the 4.4. Again, there will be an increase in the value of the bonds, and this will be an amount of, let me just include this, guys, 109 19,634, and this will be an increase. Again, guys, in our fair value through OCI, and this will then be included in our equity. Right, let's call this our calculation 3.4. Okay, guys, quite busy this page with all of the numbers. Remember, I indicate this to explain to you. Preferably, you would only have your calculation numbers. Okay, calculation 3.4, and we need to transfer this. When you look at the left side of my screen, I have an opening balance. I add the 109,634, and this will give me a total amount of 283,984. Right, 984. Great. Now let's move on. When we look at the scenario, we have now included everything in terms of the first paragraph. We have included our fair values, but what about our expected credit losses? Okay, guys, where will this line item be included? In our equity. Why? Because our fair value adjustment is included in our equity. Therefore, we need to include our line item allowance for credit losses. Okay, now what will the amount be for 2019? When we look at the scenario, they indicate to us the risk parameters will be low or was low for 2019. Will we either use the 12-month expected credit losses or our lifetime expected credit losses? When you refer to your rules, guys, expected credit losses at the bottom of your page, on initial recognition, if there is no significant increase in credit risk, guys, therefore low, we use the 12-month expected credit loss. Therefore, when we look at the information provided, we need to use the 19,200, and we need to include this 19,200 because it is low. And then for 2020, what happens? It's a high risk. It moves from low to high. Therefore, when we look at our principal, guys, at reporting date, there is a significant increase. Yes, we recognize our lifetime expected credit loss. Therefore, when we look at the scenario, we now need to recognize 120,000. Therefore, guys, look at the increase, 120,000. I'm going to transfer this first, and then we will look at the movement. Okay, now if there's an increase in the allowance for credit losses, where will we recognize that increase? This will be in our profit and loss, because when you look at this, guys, we will debit our expense in our expense in our profit and loss with a 19,200. We will credit our allowance for credit loss in our equity with a 19,200. Right, now that amount increase, we will debit our profit and loss, and we will credit our allowance for credit losses. Therefore, we need to include our expected credit losses, which is the 120,000 minus 19,200, and this will be 1,008,000, and this will be a loss. Right, guys, therefore I have now included this, and we are able to tick off this section.